that have been trying to get in?
Yeah, I've been checking that also, checking the registration thing and approving people as quickly as they check in. But if you want to check, go for it. I'm looking at the registrations too.
All right.
Okay, I have 4 people pending here. I'll zap these people.
Okay, I don't see anybody else. So
I'll keep an eye on it here also, Ben, and
cool.
We'll get the stragglers in.
Okay, so let me just kind of introduce everybody to you, and then you know, kind of remind everybody where we are and stuff, and then I'll hand it on over.
Cool. Go for it.
Okay, are we recording?
We are indeed.
All right, ladies and gentlemen, good Thursday morning to you, and I want to give a big old welcome back to Tom Alexander from AlexanderTrading.com. This is a series of webinars that we actually have not done one in a matter of many months. Tom and I have both been busy on separate projects here, which are and have been rolling out as we speak. But the process of analyzing the market through this lens and through the methodology and the following the principles of this auction market theory is ongoing and ever more so present, never more so present than in the present day environment that we're trading in right now in terms of you know, different types of structural development, in terms of being able to analyze and determine what type of phase the market's in. And basically that's the start, or at least where I start, in terms of the different time frames and trying to determine what phase it's in, because that helps you kind of simplify things, and that's really what we're trying to do in terms of all the craziness and uncertainty and complications and craziness, as I mentioned already, in trading. So we're trying to simplify things, and first and foremost, the way to do that is to be able to determine what phase the market's in. And it's only in one of two, always constantly in transitioning from one to the other across all time frames and all major markets. And that's one of the beauties of this methodology, is how robust and applicable it is across all of these markets that we watch. And so while each individual market has certain specific characteristics associated with it, this methodology applies across all. And clearly, if you look at these markets here, guys, multiple major markets, I'm talking gold, crude, I'm talking S&Ps, you know, the euro currency, most of these major markets right now are in vertical activity to the downside. The dollar vertical up, I'm talking daily time frame, and some of the other larger degree time frames. But we're breaking out of balances on the daily scale across the board here. If you look at crude, again, gold, you know, touching down on this near 1500 level, 1550 level. The S&P is breaking out, you know, that, I don't even remember what level it was right now, but 13, I think 35 or something like that. We just had the Russell break that 772 level yesterday. So again, guys, we're looking at these markets and trying to analyze them. Now, this is, as I mentioned, I'm going to introduce Tom here in a second, let him get started here, but this is a series, and we're probably not going to, I'm not sure exactly what Tom has prepared for us today, but we're probably not going to start on, you know, basic trade, you know, auction market theory principles 101, day one. That's your responsibility to go take a look at our website, which is all of these webinars are listed from day one on. We're talking, go to the tradersaudio.com website. You got to click the market research tab, and a new page will open up once you click that market research tab, and in the left margin there it says recorded or archived webinars, and then you're going to see Tom's stuff right there. And I suggest you start at the bottom of that page and work your way up, because they all build on each other. And guys, I can't even begin to tell you what this methodology or this way of viewing the market has brought to my trading. It has just eliminated the stress on multiple different levels, and changed everything around in terms of my P&L and just the way I participate in trading and how I, you know, how I talk to myself, really what it comes down to while trading. And so with all that having been said, again, I want to hand you guys over to Tom. I know everybody's looking for that 7:30 number today, so I'm not sure what the duration of the webinar that he has prepared today is, but we're going to hand it on over to Tom Alexander from AlexanderTrading.com.
Good morning, guys. Ben, thank you I don't know what's going on here. Hold on. This shouldn't be doing. Hold on. Computer issues, Ben.
Okay, no problem.
Yeah. Let's see. Hold on. Sorry, guys. Okay. Let's see. I did not intend for that to auto scroll through. A couple of points here. I have a new computer system. Ben mentioned he's having computer issues. It's constantly one thing. So golly. Bear with me. Bear with me one sec here, guys. I don't know why this is on auto scroll.
So real quick, guys, while Tom figures that out, I want to introduce you again to a little bit more of what Tom has to offer. He provides a daily briefing strategy analysis to his clients, which is basically a summary of all the markets. He takes a look kind of. Tom's an active trader himself, has been for 20 some odd years plus. He's again, he does mentorships. He offers a chat room, you know, which has active traders in it discussing markets as they're developing throughout the day. And actually the slide you're looking at here right now shows the live trading room, the trade alerts. They call out trades that he's actively in or looking at, and auction market webinars, as well as I mentioned again, the daily briefing strategy analysis that he provides.
Okay, Ben, I'm going to go to Plan B here, and I apologize. This is a workaround, but we'll get through it. You know, unfortunately, I can't talk as fast as Ben, being from the South, but I'll get us in front of that number, and we'll get out of here. As Ben said, this is a series of ongoing webinars. I'm sure Ben and I have some overlapping things working. There's going to be much more cool stuff coming from both Ben and I. Hopefully jointly, I think, and then also separately. Brief commercial, everything that I do you can access for $125 a month. We've got a live trade room. You get 2 reports, 4 auction market trade lessons a month, unique webinars. I'm trying to provide an incredible amount of value to the trader for $125 a month. This includes a live trade room. I've got a new website coming up. It's not up yet, but it will be up. But you can go to the old website now and sign up. But I'm trying to provide more information, more valid information about trading than anybody that's ever been in the education space. I will never, ever, ever, and Ben will verify this, tell you that trading is easier, that you can come in and I have a magic secret in 30 days you could be minting money. You won't be. But you will be on a path, the right path, so that you can reach consistent profitability and reach whatever your trading goals are. So, enough of the infomercial. The obligatory risk disclosure, there's a reason for this. Heed it. Ben mentioned my experience. I have been trading for 27 years. I have 24 years of market profile experience. I've worn a number of hats. In addition to being a trader, I've traded institutionally, I've traded hedge funds, I've owned my own brokerage firm. I've got quite a past. We'll get into that at some point in time. I want to talk about we're going to talk about volatility and market profile opportunity today, because as Ben alludes to, we've had some incredible opportunities lately. Now, I want to emphasize, we're not market profile traders. We don't trade market profile. You don't want to trade market profile. We're actually auction profile traders. We are auction market traders. The profile graph is a tool. It's not the end in itself. The value of this methodology, and this is why it's not this red light, green light that everybody would love to have, but unfortunately never doesn't exist and never will. The value is in understanding how an auction market develops, following auction market principles. Ben mentioned there are only 2 phases of market development, balance and imbalance. A market is either in a consolidation or it's trending, and it transitions from one to another in all degrees of time, and this is a process that's ongoing all the time. Understanding that, now that's grossly oversimplified, but that it's accurate. What are we looking for as an auction market trader, as an auction profile trader? We're looking for specific situations. We're looking for asymmetric reward to risk. We want to be able to take trades that give us the potential for a very large return in relationship to the risk that must be accepted to get in the trade. The other thing is, and this speaks to the volatility we're seeing, this is a robust approach. It adapts dynamically to market condition. It's not a rote, systematic red light, green light approach. Those approaches, systems invariably blow up because volatility changes. This adapts dynamically to volatility, and it works, quote unquote, in all markets and all time frames. Regardless of the time frame you trade, whether you trade intraday or you position trade or you swing trade, it works in all markets and all time frames. It is unwise as a trader to force trades in one market in one time frame trying to generate consistent returns. That's doing it really the hard way. You want to be opportunistic with your trading, and this is a methodology whose highest use is being opportunistic because it is so robust. It works just as well in copper, lean hogs, rough rice as it does in the Russell, the E-mini, the Euro, etc. Now, as Ben points out, since May 1st, we've had some really nice moves. The instruments that the overwhelming majority of traders focus on are the S&P Mini, the Russell, and the NAS. These are nice moves. If you had sold one contract of each of these or any of these on May 1st, from high to low, $4,500 in the S&P Mini, and then the Russell, which, as I'm sure you're all aware, has more juice than the other two, almost $6,000 per contract. These are nice moves. On the other hand, these are even nicer moves, and these are contracts that match or offer for all practical purposes all the liquidity you need to trade. You know, the big myth about trading the stock index futures, well, they're liquid. Well, these are plenty liquid to trade, and these are not the only markets that are plenty liquid to trade. I could show you grains, tons of meats. There are tons of markets that are plenty liquid to trade that you can trade using these concepts. But you can see these moves since May 1st in the Euro, $7,500, gold, $14,000, crude, $14,000, copper, almost $10,000. Well, this is the Russell. The Russell has offered the biggest yield among the stock indices since May 1st, and it's well behind any of these contracts. Now, the auction process is the natural market mechanism of an auction market. So there's a consistent pattern of development across these markets and all time frames. Because there's a consistent pattern of development, this is where you can develop a trading edge. And yeah, it does apply to day trading. I know most of you out there probably go, well, but does this work in day trading? I don't hold things overnight. Yes, it does work in day trading, but I promise you, if you take a bite of the apple, you'll begin to take things overnight because that's where the big money is made. And contrary to popular belief, it is a total myth that day trading decreases your risk. It certainly does not. I can prove that. So if what you're doing is working, keep doing it. If not, well, please give us a look. We offer an alternative that's very different. In short, it actually works. Okay, we've got a few more minutes, Ben, so I'm going to go through some of these charts of these trades that we
No problem.
discussed
Let me real
here.
quick while Tom pulls up chart, guys. I want to make it clear that this is, Tom kind of ran through some of the concepts there fairly quickly and just sort of scratch the surface. I encourage you guys to definitely dig in a little bit deeper if this is at all interesting to you, or basically if what Tom was saying applies. You know, if what you've been doing isn't working for you, you've got to change something quickly. Otherwise, you're just going to be repeating the same mistakes and you're going to get the same result. So now this isn't the type of methodology that you can look at today and all of a sudden be, trading green arrow, red arrow type activity tomorrow. You're going to have to put some time and energy into it, and you're going to have to learn it. And then even after learning it, you've got to apply it. So it's not easy, just like Tom said. Let me hand it back over to you, Tom. I just wanted to be clear again, guys, that if what you're doing isn't working, you've got to try something new. And from my experience, this is one of the most unique and one of the best ways of looking at trading that I've ever seen in all my time down here. So the only reason I bring it to your attention, guys.
Yeah, well, to highlight what Ben said, Ben is a wonderful testament to what this is about from a lot of different perspectives. Ben's environment is the trading floor. It's a frenetic, and it's an auction. The floor is an auction. It's the pure auction, but it's a time frame you can't trade as an off-floor trader. And so Ben you know, when Ben started working with me, or Ben and I started working together, and Ben was interested in learning this methodology, he is a perfect example and has experienced what a lot of people go through. And he'll tell you, I've never said this is easy. Ben learns something new every day. I think I learn something new every day. This is an extraordinarily broad, deep, rich methodology. It's not something you study for a month or two and you've mastered it.
Oh, no, you've got to experience it real time. That's what I really get the most out of when Tom always says, look, I got 27 years screen time. I mean, that's how you learn this. That's how you feel it. That's how you experience it. That's really what it is the experience over and over again. I mean, for me, guys, I used to struggle while I was in trade and the market was in balance. It was like, it was internal turmoil, literally, between, you know, whether I'm looking at it on the 5-minute or the 30-minute, going from the high of the balance back down through the middle of the range to the low of the balance. And I'm like, if I'm short, I'm like, woohoo, we're at the low of the balance, you know, and then it's back up to the high, and I'm like, oh, man, I'm the worst trader in the world. And then back down to the low of the balance, I'm like, woohoo. And this is all within a balance. Again, whatever time frame it is, I can handle the vertical activity because it was either in my favor where I'm making money, or it was against me, or I'm knowing I'm just being stubborn, you know, and I'm not getting out. But basically it was the balance that used to drive me nuts. Now I've been able to embrace that balance and that auction process and been able to relax and understand that what I really want to be looking for is the move out of the balance and the activity on the outer extremes of the balance. So it's really just changed how I feel while in trade in many ways. It's removed a lot of the anxiety and a lot of the stress associated with it, nervousness.
Okay, guys, this I'm just going to show you the daily charts real quickly, and if we have time, I'll show you some shorter-term charts. But these are just the moves that occurred. I mean, this is the move in the Russell from high to, well, when I made this chart, we're lower now, but this is about a little over 7% move, about a $6 grand move. And then if we go to, say, the euro, this is from May 1st down to here. Now, all of these moves, anybody can put a line here and a line here and say, see how much money you made. All of these examples that I show you are trades that we were discussing in real time before they occurred. Did all of my clients take these trades? Absolutely not. Did some of my clients take all of these trades? Yes. Or did some of my clients take one or more of these trades? Yes, they did.
Well, and Tom, leave that chart up for a second. One of the nicest things, I know I keep interrupting you, but again, guys, this is more just sort of a review and getting us back together and out in front of you, and we're going to do more of these and break down the markets a little bit more. But Tom always talks about how it's not necessarily catch the high print, if you will. And if you look at that area, that top line where he has the 132.87 line drawn there, okay, what I'm seeing there, yeah, like Tom just said, of course, anybody can sit here and go, okay, you could have sold up here and bought down here. Well, yeah, I mean, hindsight's 20/20. But if you look at the beauty of it is, look at that balance that was forming right around the middle of May. And it's forming in between the 134 area and that 133 area. Well, the 132.87 high that he posted there and has that line, it runs right up to that balance on just to the left of the market up above there. That's it right there, Tom. It runs right up to that balance and then rejects it severely. So yes, how sweet would have been able to say, okay, that's major rejection right there. I'm going to get short right at that 132.87 level. Well, great, yeah, but not highly probable. But then you have 1, 2, 3, 4 down days almost in a row before a huge gap day, even at the 130 level where it really breaks out of the larger degree balance area. And then you've got from 138 even all the way down to 127 right now. The market's currently trading 126.89 and has no stopping price whatsoever, and there's no balance forming. Tom's outlining this as I speak, but basically this thing could continue into the abyss. I mean, clearly it could test, you know, this lower level 124. If it breaks out through this 126 level, it's in you know, free fall basically. So again, it will continue going lower until sellers do not see value to sell at those higher levels, if you will. Okay, until buyers now see value and come in and start to participate at lower levels and become buyers. So, but again, for the most part, you know, again, all I really wanted to point out there, Tom, was, yeah, sure, it would have been sweet to sell the 132.87 level, but not necessary. There's 400 600 ticks of range to the downside there, and it's still in vertical free fall.
Yeah, and another thing about this, you're trading market condition, you're not trading price. And when you understand what the market condition is, it helps you eliminate it. As much as it's telling you what to do, it can be very definitive in telling you what not to do. And when a market's in clear vertical development, it's telling you, I'm either taking trades in that direction or I'm letting the market set up, but I'm not going to fight it. So, you know, if you can do nothing but eliminate what not to do, you're going to be ahead of 95% of the traders out there who have no clue every day and come in and they try to sell things that are going straight up and they try to buy things that are going straight down. That constitutes the typical strategy of a lot of traders.
I can't tell you how much money that saved me over the last 2 years, Tom. Just to stop fading vertical moves like that because I missed out on the right side of it, now decide to all of a sudden be the hero and show everybody I can take the other side of it, you know. And the other time that it saves me money over and over again is where I'm thinking, okay, this is a great place to put on trade, and then I look all of a sudden, I'm like, oh my God, we're right in the middle of this balance here. It's totally random. Why would I want to put on trade here? You know, it's a coin toss. And so those are the times, those are the 2 times I can't tell you how much money that saved me. And not only money, just stress, you know, and participation energy, you know, that could have been stored up for another time, you know, keeping your powder dry, so to say.
And here's a perfect example, another example, Ben, that you were talking about earlier, where, you know, this is the robustness of this. And robust means many things, but one of them is that's unique about this is that this process is occurring in all degrees of time all the time. So here in gold, you have this larger degree balance area that's forming. Then you had a smaller degree balance area that forms. Then you have an even smaller degree of time balance area that forms. This is what you're looking for. When you're taking a trade in here, guys, you've got the reward of this tiny box here and the potential return not only of the larger range structure, but the much larger range than this. Now, I know for a fact some of my clients got short in here and have been short. Now they're sitting pretty fat because if this level does break, I mean, gold is truly in the abyss. And if it doesn't break and it begins to work its way back up, then you've got another trade decision because you haven't broken out of this large degree balance area. So gold is at an auction market inflection point now, and you can write this down. Gold is going to move sharply away from this area, and you want to eventually be on the right side of the move that gold makes outside of this general range. So that's the type of thing that as an auction market trader, as auction market traders are looking for. Yeah, now, I've got some more slides, Ben. I'm going to let you wrap up here. We've got about 6 minutes, and I don't want to overlap with
I got you. We're going to do another one in a week or two, guys. I'll work with Tom to get organized and set another one up for another Thursday morning. We'll look again at you know, just some specific examples, I think, is if anybody has any questions, specific comments, or you know, topics that they'd like covered, please feel free to email me or Tom. But one thing that I find about this system, which is the most interesting of all, you know, for me, is the fractal aspect of it all. I mean, you can sit here and watch development. I talked about it yesterday, Tom. It was so funny. I can't remember which market it was. I want to say it was in the gold, but we were in vertical up in the, we were in balance in the 5. We were in vertical down, up in the 30, but vertical down in the daily. You know, so it was like, it at times is a little confusing, don't get me wrong, but the fractal aspect of it, for me, is really luring, and it's really interesting, and it really helps you understand, again, what makes the market, because everybody's looking at different time frames, in addition to all the different studies and all the other things that they're looking at, but it helps you understand why a buyer's coming to the market on the highs, if you will, or a seller on the lows, or, you know, because, again, everybody's looking at different time frames. So get in touch with Tom Alexander if you have any specific questions. The other thing I want to do is encourage you to check out some of the webinars that he's already posted on the website and spent time doing with us, so that you're not calling him up with a very simple kind of newbie basic question. Now, while Tom is very generous and with his time would probably answer the question for you and probably talk to you for hours on end about it, because it's interesting to him and he really gets a lot out of it when he shares his time with you. But I also want to be clear of the fact that you're going to do a lot better in terms of you getting something out of it in terms of the conversation with him or with me if you put the time in to learn some of the lingo, some of the terminology, and just the basics. You can do that by going to tradersaudio.com, click the market research tab. Again, we've got literally, there's probably 20 or 30 webinars up there, you know, regular event webinars that we were recording and posting, and they go from the basics all the way up to market interpretation. Again, this is Tom Alexander from AlexanderTrading.com. Guys, I can't even begin to scratch the surface in terms of telling you guys how much respect I have for him and this trading methodology. Basically, I'm a student as well as you guys, and that's the whole, you know, kind of approach towards this, is that we're all starting out on the same page and learning it together as we go. I want to thank Tom for his time this morning, guys. We got a number in a few minutes here, guys. So again, I highly encourage you to check this stuff out because it's extremely interesting, and if nothing else, it might be something that might groove with something that you're already doing right now, and if that's the case, it's even better.
Ben, thanks, guys. Thanks a lot. This has been fun. We'll do this again, guys.
I'm good. Talk to you guys later. Thanks again, Tom.